Okay, so the title of this webinar is about unicorn hunting. I hope there are no Harry Potter fans or whatever, and you've come to the right place. Without further ado, I will go to the presentation now. And I'm hoping everybody can see my screen as it is. Please let me know if not, but otherwise I'll continue. Okay, so we're going to be talking about unicorn hunting, and particularly about the unicorns of tomorrow. And obviously going to explain what is a unicorn, why unicorns, and why impact unicorns, what are the sectors and trends and where we might see significant growing companies, some examples, and how to participate, particularly with a reference to the EIS community, which we'll come on to at the end as well. Okay, so killer question, what is a unicorn? So a bit of a cheesy American phrase that has come out of the West Coast VC community, essentially a private company that achieves a valuation of $1 billion before it exits. There are blurry definitions and some people who can't agree. So there is nothing particularly scientific, but different definitions have led to different data sets, but more or less that's the idea. And they mostly now refer to technology startups. Again, definitions. So depending on who you, which list you look at, there are between about 500 and 1,000 unicorns globally. And if you wanted to look at the odds of becoming one, good luck. It's a 0.01% to 0.07%, depending on who you speak to. But the point really is here, these are successful companies. This is what most VCs are searching for, particularly the sort of big winner-takes-all type VCs, and typically the West Coast American VCs, as you'll probably hear about it. And actually, if we look about the unicorns, I'll obviously come into much more detail and give you some ideas. I'm sure you can think of a few by name. I'll come into those in a second. We rank in the UK pretty well, I would say. We are fourth by volume, and that's the bar on the left here. So you can see only behind the US, China, and India, two massive countries, well, three massive countries and one massive developed country, if not two. On the right-hand side, I've done some analysis per GDP, which is the blue chart, and per population, per capita, so to speak. And what you can see is if we look at the blue line, we come out fourth behind the top three that I've mentioned, and Israel, which is a phenomenon and a massive outlier in a very positive way. And if we do it per population, we come out third behind Israel and the United States. So what are the conclusions we can draw even from this analysis, or at least hypotheses? One hypothesis is that actually, when you've got an enormous market, and the US, China, and India clearly have enormous markets internally, contiguously, you have a big opportunity because you can pump more cash into successful looking startups and you can grow from there. But Israel would completely contradict that, being a very small country that's not exactly surrounded by friends. You have the UK, which is doing pretty damn well against its peers. Can we learn from all of these and potentially get even better? Maybe 8 out of 10, maybe 9 out of 10, pretty good. What I also want to take you through to, we're really looking at in a future forward-looking way, but I think it's really important to look at what happened in the past and in the recent past. So these are some analyses that we've done based on the data set that we prefer. And you can see that the core sectors that have first become unicorns and that have been burgeoning are in fintech and internet software and services, and potentially also e-commerce, although it's not so big compared to the others. And these are classic companies, anything you can think of, from Monzo to Airbnb to Amazon. I mean, it's probably not in this time frame, but all of those in these sectors. Why are they becoming unicorns? What's the big themes that are going on here? And these are large, disruptive, I would say industries, but let me come on to qualify that. There's nothing new about finance, there's nothing new about shopping, and there's nothing new about hotels. But all of these have been disrupted in ways we've never seen before, pre-COVID, and of course, COVID has accentuated many of these trends even more. really boosting the value of people in these sectors. So really what we're looking at is that we're looking at consumer behavior, and we're really looking at disruptive consumer behavior, which is changing, not necessarily the underlying product, but maybe the delivery mechanism or something like that. And it's this disruption in the industries. If you look at these industries, they're actually maturing. Fintech, if you know anything about the UK fintech industry, none of them are making money. It's going to be a winner takes all, maybe not one, but a few are going to fall away. A few already have fallen away. A few on the continent have already gone pop after a few years of being pumped with cash. So, you know, this is the kind of sort of maturing of the sector. And what we're positing and what we're seeing, and I'll come on to the data that backs up our hypothesis in a second, is actually the disruptive industries of tomorrow that are changing. And these aren't the historic industries of the past. So let me draw you into where I'm going with this and the unicorns of the future. There's some really good quotes here. The Larry Fink, BlackRock, he's saying, won't be a search engine, won't be a media company, there'll be businesses developing, as you can see, green hydrogen, green agriculture, green. So these are all impact unicorns, if you like, unicorns that are focusing on the disruptive new industries that we need to invest in and are being invested in to, frankly, help look after and improve this planet. And Bill Gates, no longer with Microsoft formally, but clearly making big impact himself, is also making the same kind of allusion, is, you know, this is all heading in this direction in impact. And impact unicorns, you know, may not be a phrase that you've heard before. And some people have defined impact unicorns as helping 1 billion lives, not just making $1 billion privately. I'm not sure I share that analysis. It's a nice analysis. You can define things how you want. I would just say an impact unicorn is a unicorn that's helping impact, but, you know, there's no right answer. It's a really nice idea that some of these companies will go on to impact and help 1 billion lives nonetheless, which is fantastic. So let's look at the UK impact sector. This is absolutely phenomenal. And the impact sector is doing even better than the unicorn sector, if you like, when it comes to startups. There's 2 billion being raised, you can see. The impact investing is growing massively, and there's an enormous amount of people employed. These are government figures. It's a really good gig. And I'll come on to this in a second, why the UK for impact, the reasons why, the kind of companies, and you'll recognize hopefully some of the names, and some of them I'm sure, like me, you may not. So what's going on? Well, if we look at the SRI market, and if you're familiar with that, it's or not, it's the socially responsible investing market. This is the market that includes ESG, but primarily impact as well. You can actually see that over the past years, when SRI compared to the MSCI benchmark, the Morgan Stanley benchmark, and non-SRI, you can actually see that it was not particularly profitable. These are returns from 15 to 20 to be SRI, but 17 to 20, it was better than the others, the darker bar. And more recently in 2020, because everyone else was underwater, because of the recession, or the shrinkage, I should say, in the economy, it definitely was. So what's actually happening here, without even a do-gooding lens or an impact lens, it just financially makes sense in these sectors. We've had COP26, we've got all these themes. Governments are pouring money into infrastructure and into projects and supporting companies that are going to help to save our planet. And consumer trends, just as we talked before, and we saw the booms in fintech and in e-commerce, consumer habits are changing rapidly. Consumers are taking action collectively, and we've seen that in all kinds of ways over the past couple of years, how much the world can change with unified consumer behavior. So let's have a look at the UK's so-called 12 impact unicorns, and you can see that, you know, this is a government definition. Actually, you might find some more, or you might have different views on it. It doesn't really matter too much, but this is the UK government's definition, which is good. And you can sort of read, there might be some logos you're familiar with. But if you're not, have a think. All these companies are worth $1 billion. So if you have heard of it, that's pretty good. If you haven't heard of it, and I'll conclude myself in that category, these names are really moving the needle, and they're not even listed yet or exited. So these are still backed by private individuals or private companies. And people like you and I, on a personal basis, could still be the original shareholding or the first, angel round in these companies. So let's look at some sectors. Obviously, these guys are in electric mobilization, electric mobility, one on land, one in the air. Arrival is doing electric vans and trucks and improving the range there. And I would encourage you to look at them if you haven't. Very interesting space age kind of designs, and ditto with vertical as well. Then you've got renewable energy companies over in Octopus, who are making sure that all their energy comes from renewable sources and are disrupting their own supply chains in order to bring those energy to the customers. You actually have 3 hardcore B2B technology plays, if you like, for green hydrogen, batteries, and so forth. You can see there. So this is actually the underlying technology of energy generation and how we're going to do it more effectively and efficiently. And then over here we have some health and some pharma, which is driving disruption, and a couple there from some more niche sectors. But this kind of is hinting at where the world is going. None of these are fintechs. None of these are well, arguably one, Depop is e-commerce, got an e-commerce kind of background, and potentially Babylon as well, online doctors, but are coming from a different angle. So what's going on? Where do we find these unicorns, and where do we place our bets, and how do we do that, which we'll come on to. So we did some more analysis here on another data set, looking at the growth in Series A deals over the last 5 years. Or the 5 years to June 21, I believe. Series A, for those of you not familiar with the phrase, is the sort of first sort of proper, in inverted commas, sort of West Coast type investment in a company, private investment. So people define it slightly differently, but it's typically a $3 to sort of $5 million check, which is a sort of validation of company's scalability. And the point here is that people are betting here on the next unicorns. When people are putting Series A, these companies are inherently still not baked yet. Potentially they're available for private investors again, like you and I, and we'll come on to that. But what you can see is that these are disruptive industries and sectors, if you like, and you can see ag tech and new food. That's everything. If you've read the papers or you're up to date on with this kind of thing, is breeding maggot larvae for extra protein feed for animals. This is a massive industry with 2 big companies in France. And one of them, I think, is a unicorn already. Through to lab-grown meats, through to all kinds of disruptive vertical farms, new ways of making food and distributing food. Blockchain you'll know about, but even taking out the cryptocurrency side of things, which in my opinion gives blockchain a bad name, there's a lot of very useful B2B technologies that use distributed ledgers for applications in security. In airports, we've seen a lot of deal flow in this sector. Robotics, the other ones kind of maybe need less. Fintech is there, so it does feature, and it's still important. But there are, you can see others around it and above it in terms of the actual phenomenal growth rate of the number of deals. So these aren't necessarily in the impact sectors per se, because we couldn't find the granular data, but I think they're high indicators of the disruptive sectors, and they give an indication. Clearly, ag tech and new food is almost all impact related. There'll be a proportion of blockchain which is and isn't, but you hopefully get the idea. The rest you can see: clean tech, life sciences. These are all impact sectors. AI and big data and robotics will be, a big percentage thereof. And if you look at some, I've picked out some quotes, but really it's all kind of flowing the same way. The Produce Marketing Association, which is all about the future of food. This is the VP of Technology. There is a big theme about consumers now taking power, taking notice, and changing their habits and behaviors, looking at the label. They want different kinds of sustainable protein and or foodstuffs. We see also here big trends in investment in climate tech. You can see massive uplift in the investment that's going on in everything from wind farms to technology to electric vehicles and everything, green hydrogen, everything in the middle. And then the last big trend is biological sciences. So, you know, this is where we see the, if you like, the unicorns coming from. You saw the UK ones, impact unicorns, and this are the themes here. And what I want to do is actually to take you to two companies that we know well, one of which we are an institutional investor in, and we're very pleased with that investment. And the other one is one we know well, and we aren't an investor, just to kind of balance it out in a slightly different sector as well. And really just to kind of give you a flavor of an impact business that may be a impact unicorn in the future. It may not be. And actually, it's worth kind of at this point saying that we are not betting on unicorns, and maybe lots of other fund managers aren't just betting for unicorns. Actually, as it happens, we're betting on a business that can generate a 10x return within 5 years or more. Clearly, if it becomes a unicorn and goes on to become $1 billion, that's fantastic. And we are always looking out for those as well. But, you know, it's kind of just contextualizing the unicorn theme. But some of these will become unicorns. And indeed, we very much wish and hope to encourage our own portfolio to the ambition required. So this one's called Echion Technologies. It's as you can see, it's a battery materials technology. Can't really show you much apart from something down an electron microscope, which most people don't tend to understand without a lot of dialogue. But the point here is that Cambridge spin out, as you can see, has massively charging time, faster charging times, lower cost, very environmentally friendly for lithium ion, and it's really helping to supercharge, no pun intended, the whole electric vehicle and electrification and charging points, etc. And it's gone from strength to strength. So there's been various collaborations with bus and commercial vehicles, some strategic investments from some well-known battery firms as well. And the technology is being adopted into sort of Mark 1, if you like, versions, and we've already made an uplift. It's still, you know, we haven't exited, and anything theoretically could happen, but you know, we're very, very pleased with this business, and this is a bang in the center of climate tech business. This was another example of another business that is looking to make plastics from sustainable materials as a natural alternative to single-use plastics. A company called Zampler, I believe they're called. Apologies if I get that wrong, but that's what I keep calling them. And you can see it uses plant protein materials and all the things that we take for granted that we find very hard to get rid of. All of these can be produced in a really sustainable way, and it's raised a lot of money. It's growing very quickly, and it's making a lot of impact in many ways, financial and in the amount of single-use plastics and waste being going into the environment. So then the question remains, okay, this is great. I can see, you know, these are the themes of the future. I see how they've moved from the themes of the past. How do I actually get to invest in these companies? And we are an EIS fund provider, but you know, just generally speaking, we are very, very bullish in terms of the framework of EIS to get these kinds of attract these kinds of companies. If you like, the EIS is, and hopefully people on this call will have at least heard of it and probably know quite a lot about it. Some of you. It's a government-backed, UK government-backed scheme, which has been massively successful in terms of the amount it's raised. I'll just put some facts and figures and on the board now. So it's raised 22 billion to date. These are just headlines. People may know more detail on the call, of course, and there's more I can share afterwards. But you've got to be a small company. That's the whole point. It's to de-risk it. You've got to have gross assets less than 15 million. And less than 250, although there's something called knowledge intensive firms where you can have up to 500 full-time employees. And the advantages of EIS, there's a bit here, there's obviously a lot more. And so I'll leave you to kind of visually digest that. But essentially, the income tax relief is 30% up front. So that means for every pound you invest, assuming you have the income tax and all the other things remain in play, then every pound you invest, you get 30p back on your income tax. Tax-free growth, that's no capital gains. So if the company exits, you get you don't have to pay CGT on the exit. Inheritance tax relief, you can read that, you can see that. There's capital gains deferral. This is quite a popular one. So if you realize a taxable gain in any investment elsewhere and you invest the gain in an EIS qualifying investment, you can defer the capital as long as the money invested is in EIS. So if you keep exiting and investing, then you manage to defer indefinitely the capital gain whilst making lots of, hopefully, money in the meantime. Carryback relief, that's just means that you don't have to do it in the tax year you're in. It can be from the tax year hence, or 1 year previously. And loss relief, which means that even if things don't go to plan, and I have to be balanced here and say that they don't always go to plan. This is a high risk. You're betting in the high risk as part of the market. You still get the chance to offset the losses, less the income tax. So I'll probably get the figures wrong, but it's something like 70 to 80%, or 70 something percent, I should know this off the top of my head, is potentially the amount you can get crystallized for loss relief if all the criteria are fulfilled and the business you invested in doesn't make it to start with. There are disadvantages, of course. There are some complexities, and depending on your situation, that can qualify or not. Rules can change. This is all very early stage. Liquidity is a challenge. It's one thing that we as a fund manager take very seriously on how we actually get out of our investments. And these companies aren't quoted, so they can values can really jerk around depending on what happens in the company. So what is probably worth saying just as a conclusion is you can invest in either individually yourself, of course, or through a fund such as ourselves. We have a knowledge intensive impact fund, so that actually means that we have a close date of, I think, the 30th of this month, March, 29th of March, which if you invest, it means you're guaranteed for this tax year to invest in between 5 to 9 companies in your portfolio. So that's one way you can invest. And there are other funds available, and of course you can choose to invest yourself. There are some other sort of points here as well. So the UK is a great place, in my opinion, for young companies and for impact and growing companies and finding unicorns, as well as other types of exotic mythical beasts along the way, baby unicorns, whatever the expression is. The EIS framework is very supportive there. So I'd like to thank you very much for your attention. And in the time we have, we've got about 5 minutes. I see some questions are coming in, and I will endeavour to answer them. So my details there. If anyone wants to get in touch afterwards, you think of a question, we'd love to hear from you. So first question here is the fund or funds like this reliant on finding a unicorn? So very good question. Thank you for that. I would say that the answer is no. Unicorns are, by their very name and nature, rare, and also the idea that one company will pay for the entire fund, if you like, because it's the biggest and all the other ones dissipate, is perhaps a very leveraged strategy. As I mentioned before, we take a pragmatic approach in our portfolio for any investor of 5 to 7 companies. Anyone can build their own portfolio, of course, if you have the time and you want to sift through companies and try and manage them. And for us, it's more taking a sort of lower risk approach, which is that we definitely hope and we try to support companies to do that, but it's more about finding the 10x's. So for every pound we invest, we try and get 10 back for you, for the investor, I should say, within a 5-year period. So yeah, good question. And okay, another question coming in from Mark. Do early investors in unicorns do well, or do they get diluted to smithereens? That's not my words. This is Mark here, as you can see on the chat. So that's a really interesting one. Okay, so early investors. So the answer can be mixed actually. There should be a risk and reward curve, right? This is the kind of theoretical model where you get in early, you know, you hear down a pub or on the bus that, you know, somebody's got this great deal, or you invest really early, and you know you know 5 years later it's Tesla and it's motoring and etc. and you've got a lot. I would say that early stage investors in reality don't always get, and I'm speaking from some experience here on both sides of the fence, they don't always get the risk and reward that perhaps they merit. And there are a couple of reasons for that. Things like follow-on funding in particular. So, you know, these companies are high growing, and even if they have underlying profitability, which is, you know, not necessarily that common, then they still require support. And that's, you know, where the VC community sort of piles in, and actually early investors can get squashed, and sometimes squashed more than they took the risk for when the final analysis is done. And the point here is that as a single investor, if you want to invest in these on your own, then, you know, it's challenging. If you come in first, you know, you might have to be asked to follow your money to maintain your stake. There may be a down round, or there may be a flat round, if people understand that way of talking. For a managed fund like ourselves, we still have challenges, but it's easier for us in the sense of we have proper structuring, conflicts committees, we're able to follow our money potentially with different cohorts where that permits. So we're able to maintain our stake, and we usually have people on the board, and we have articles and get ourselves in the shareholder agreement as well, with some rights. So protection rights for minorities. So long answer, great question. I would say it's, you know, it's not always rosy coming in on your own in a small company early. So worth thinking about. Thank you. Right, we have last question I think we have time for. Does the fund close before this year end for the tax breaks to apply? Okay, thank you for that. So that's about our specific fund. The answer is yes. So we're a knowledge intensive fund, meaning that even though we're going to be making investments over the next few months, investing the money before the end of this tax year means that it crystallizes in this tax year date, so 21-22. So anyone interested, or if your clients or partners or whatever, obviously we're and we'd love to hear from you the next week or so of this tax year. Okay, if there's no other questions, I hope you enjoyed the presentation. I hope you found it interesting, the webinar. Always here for feedback. There are some further slides and background and the data that we used as well. So if anyone's interested in that, do get in touch. Delighted to speak to anybody. And otherwise, have a great rest of your afternoon, and thank you very much.